Hello everyone, and welcome to your Money Your Way YouTube channel. In this video, we're going to take a deep dive into the case study of KNR Constructions Limited. Don't forget to hit the subscribe button and turn on the notification bell to stay updated with our more videos. KNR Constructions Limited. Founded in 1995, KNR Construction Limited is a multi-domain infrastructure project and development company that provides engineering, procurement, and construction services across various sectors in India. They use different contract models like engineering, procurement, and construction, build, operate, transfer, and hybrid annuity model to build and operate projects for the government. With over 20 years of experience, KNRCL has executed more than 7,500 lane-kilometer road projects across 12 states in India. Their clients includes big names like National Highways Authority of India, Ministry of Road Transport and Highways, Karnataka State Highways Improvement Project GMR Projects Private Limited, Engineers India Limited, NMDC Limited, and etc. So, get ready to hit the road with KNR Constructions Limited. Let's talk about revenue mix. Client-wise, captive HAM projects 49%, state government 36%, central government 11%, others private players 4%. Segment-wise, roads HAM 49%, roads others 28%, irrigation 23%. Sales growth. KNR Constructions Limited, a construction company in India, had a net sales growth of 24% year-on-year to 3,606 Indian rupees crore in financial year 2022. They booked sales of 970 Indian rupees crore from irrigation projects and had a toll collection of 38.6 Indian rupees crore from KNR Muzaffarpur Barani Tollway Private Limited. In 9 months financial year 2023, sales grew by 13% year-on-year to 2,817 Indian rupees crore, mainly driven by hybrid annuity model projects, with revenue visibility for the next 2 years from the total order book position of 8,100 Indian rupees crore as of December 31st, 2022. EBITDA growth. KNR's EBITDA grew by 15% to 799 Indian rupees crore in financial year 2022. But this growth was slowed down by higher costs for raw materials and subcontracts. In 9 months financial year 2023, the EBITDA saw a rise of 29% year-on-year to 671 Indian rupees crore, driven by lower expenses, and excluding arbitration claims, it grew by 24% year-on-year. PAT growth. Let's talk about some numbers. In financial year 2022, the company's PAT took a hit and decreased by 5% year-on-year to 355 Indian rupees crore due to lower exceptional gain and higher tax expenses. However, if we exclude exceptional gains, the PT grew by 15% year-on-year to 334 Indian rupees crore. But in 9 months financial year 2023, the company bounced back and saw a 39% year-on-year increase in PAT to 298 Indian rupees crore, thanks to higher exceptional income of 61.8 Indian rupees crore. If we remove exceptional income and arbitration claims, PAT grew by 13% year-on-year to 220 Indian rupees crore. EBITDA margin. In financial year 2021, the company witnessed a contraction in the EBITDA margin due to high raw material costs and subcontract expenses. In financial year 2022, the margin contracted even more due to a decrease in gross profit margin and an increase in other expenses. However, things took a positive turn in 9M financial year 2023, as the EBITDA margin expanded by a whopping 307 bps year-on-year to 23.8%. And if you exclude arbitration claims, the margin stood at 23.2%, that is, an expansion of 240 bps year-on-year. Let's dive in and find out more. PAT margin. In financial year 2021, the company's profit margin increased due to a one-time gain. But after removing that gain, the profit margin was around 10%. However, in financial year 2022, the profit margin took a dip of 309 bps year-on-year to 9.8%. Without that one-time gain, it was even lower at 9.3%. But things started to look up in 9 months financial year 2023, where the profit margin increased by 199 bps year-on-year to 10.6%. But excluding that one-time gain and other claims, the profit margin was at 7.8%. ROCE. Financial year 2022, the ROCE of the company went down because of the company's high increase in capital employed. This was caused by an increase in long-term borrowings from 728 Indian rupees crore to 1,372 Indian rupees crore. However, don't worry. The company's average ROCE of the last 5 years has been around 21%, so it's still doing pretty well. ROE. In the last financial year, the company's ROE took a hit due to a drop in their net profit. But don't worry, the average ROE of the past 5 years has been around 21%. Cash flows. Looks like the company had a bit of a cash flow problem in financial year 2022. They had negative cash flow from operating activities of 336 Indian rupees crore due to some adjustments in receivables and payables. And to make matters worse, they had a cash outflow of 408 Indian rupees crore from investing activities because they bought some property, plant and equipment. But hey, there's a silver lining. They got some cash inflow from financing activities, around 765 Indian rupees crore, thanks to some long-term borrowings and non-controlling interest. Debt to equity. In financial year 2022, the debt-to-equity ratio increased due to a total debt of 1,457 Indian rupees crore. That's a lot of debt. However, there's some good news. The consolidated debt as of December 31st, 2022, decreased to 456 Indian rupees crore, and the company is now debt-free on a standalone basis. So, let's hope our company can keep its finances in check from now on. P ratio. KNR Constructions Limited stock is trading at a TTM P ratio multiple of 15.26. The company has a good track record in timely completion of projects and stands to benefit from increased government spending on infrastructure in the coming years. Dividend yield. In financial year 2022, KNR Constructions Limited paid a final dividend of 0.25 Indian rupees per share, meaning you get 25 paisa for every share you own. This resulted in a dividend payout ratio of 2%. But don't get too excited, this is pretty normal for the company as their payout ratio has been in the range of 2% to 3% in the past few years. Shareholding pattern. KNR Constructions Limited's promoter shareholding is at 51.09%, which means they have the majority of the company's shares. Meanwhile, foreign institutional investors increased their shareholding to 5.93% in the March quarter. On the other hand, domestic institutional investors' shareholding slightly decreased to 34.37% in the same quarter. As for the top public shareholding, HDFC Trustee Company Limited has 6.59%, followed by DSP Flexi Cap Fund with 6.44%. Other notable shareholders include SBI Small Cap Fund, ICICI Prudential Flexi Cap Fund, and HSBC Value Fund. The rest are Invesco India Equity and Bond Fund, Franklin India Smaller Companies Fund, Axis Mutual Fund Trustee Limited, Nippon Life India Trustee Limited, Tata Mutual Fund, Canara Robeco Mutual Fund, Tata AIA Life Insurance Company Limited, and Kotak Small Cap Fund. Well, there you have it. That's how the shareholding looks like in KNR Constructions Limited. Sector potential. India has a massive road network of 59 lakh km, including national and state highways. The National Infrastructure Pipeline plans to invest 111 lakh crore from FY20-25, with 18% allocated for the road sector to improve safety features and road length. The pipeline includes 1,815 national highway projects and 5 expressway projects spanning 87,612 kilometers and 2,142 kilometers, respectively. The marquee projects are Delhi-Mumbai Expressway and Chennai-Bengaluru Expressway. The Bharatmala project aims to connect 550 district headquarters with a minimum 4-lane highway for an estimated cost of 5.35 Indian rupees lakh crore. Future outlook. A road construction company is expecting to make around 3,000 Indian rupees crore to 3,500 Indian rupees crore in revenue in FY23 and around 4,000 Indian rupees crore in FY24. They also expect to get new orders worth 4,000 to 5,000 Indian rupees crore. The company plans to focus on road and irrigation projects, but they are open to diversify into airport or metro projects. They received a letter of acceptance for a new road project worth 34.2 Indian rupees crore. The company is optimistic about the increase in toll collection due to the improving economy. Please note that the information presented in this video is based on our research on the company. The purpose of this video is to provide educational insights about the company. It is important to conduct your own research before making any investment decisions. Don't forget to subscribe to our channel to show your support and receive notifications of our future videos. Thank you for watching, and stay tuned for more content.